Let's move right on then and focus in on Poonawalla Fincorp. Came out with numbers with net profits jumping to 181 crores, with the company recording the highest ever quarterly disbursement growth in Q4. My colleague Ajay Sharma caught up with Abhay Bhutada, the MD of Poonawalla Fincorp, to decode the earnings. Listen in.
Last year we did 37% AUM growth, mainly because of the consumer and MSME segment. So we have overall machinery loan, supply chain, loan against property, personal loan, loan to professionals, medical equipment loan. So we have multiple products and we are targeting basically the segment which is a formal income segment, bureau tested segment. Market opportunity is huge. On the basis of that, we have given guidance from last quarter that we will be able to grow 35 to 40%. So current year also will stick to the guidance of 35 to 40%. And in terms of return on asset, we have crossed 5% in the recent quarter. However, on a steady state basis, we'll be able to maintain 4 to 4.5%.
If you could share some outlook for a full year basis or roughly 3 to 4 quarters far out, what kind of outlook can you share on growth and also on ROA?
So as I discussed, the growth we are looking for quarter on quarter basis 8 to 10%, year on year basis 35 to 40%, considering the market opportunity available and our base is low. Still we are at 16,143 as a AUM. In terms of ROA, on a quarterly basis, last quarter we crossed 5%. For the entire year, last year it was 4.4%. But on a steady state basis, we'll be able to maintain the range of 4 to 4.5%.
Right. Abhay, talk to us about how's the breakup looking in terms of secured, unsecured for your entire loan book, and also if you could share on your on your loans front, the raw material, the capital front, what is the breakup on short term and long term kind of capital available to you?
Right. So if you see secured, currently it is 50-50 secured and unsecured, but going further, considering the opportunity available, we'll do secured 40%, unsecured 60%. Again, in terms of short-term lending, we target 20 to 25% short-term lending, 70 to 75% medium and long-term lending. In terms of borrowing mix also, we got AAA rating from CRISIL and K recently. So considering that, we started short-term borrowing and will target more short-term borrowing going further. And we got a couple of bank loans last year. So initially target was bank loan. Now this year target will be a more than 4,000 crore will raise from short-term borrowing.
Abhay, also we saw in this quarter that your OPEX is actually witnessing a decline on a sequential basis. Can you talk to us how are you achieving this, especially at a time when your AUM growth is around 35% plus?
Right. If you see last year, our OPEX at a standalone level was approximate 800 crore. So I think in terms of absolute number, the current year it will be the same number, approximate 800 crore. Last year it was 6%, majorly because of the ESOP charge. We have given ESOP to more than 400 people. So that charge itself was around 150 crore. So around 6%. But if you see the real ESOP charge and other, if you exclude, that was much lesser. So current year, you will see 2% reduction in the overall OPEX in terms of OPEX to AUM. So it will be around 4%. And going further on a steady state basis, we'll be able to maintain below 3 level.
Let's talk about the other part of your business, and that is risk management. Asset quality, the levels which you are wanting to maintain or achieve, because on the one side there's very high growth, 35% plus. How are you managing risk? What are your controls in place, and also the asset quality levels which you would definitely confident of maintaining?
You're right. I think it is very important to understand growth is very easy considering the huge opportunity available in the segment which we are targeting. At the same time, we need to collect the money. But we are in the risk business. We are not in the collection business. You see the overall last 2 year performance, new book is performing really well. The reason is on the consumer side or on the MSME side, the segment which we are targeting, so it's a combination of fintech, bank and NBFC. We behave like a fintech in terms of user experience. We understand practical call, understanding of the NBFC, the cash flow based lending, and we started targeting customer of a bank. So the segment which we are targeting is a credit tested customer, bureau tested, formal income segment. We get a lot of data input from GST, TDS, or the statutories of the customer, the business vintage and the bureau vintage. So it's very easy for us. It's like credit by invitation. See, we have built the risk culture and the overall credit culture in the organization. That was our main motto. We have a very strong analytics team. On the basis of that, the overall market opportunity of the live bureau base is more than 20 crore, and still we have more than 2 million customers live with us. So the base is very low. We don't see any challenge next 5 year, and we don't cater to new to credit segment. So considering all this, we are quite confident to maintain our management vision 2025 that we will maintain net NPA below 1, and you can see further improvement in the asset quality as well.
Excellent. One last question, Abhay. I'd like to know what is the status of your sale of housing subsidiary? When is the money expected? If you could tell us what level is it right now?
So we have received lenders approval, we have received shareholders approval. Now we are waiting for RBI approval, which is under process.
All right, Abhay, thanks very much for chatting with us and sharing your thoughts on your operational performance and way forward. Thank you very much for your time.
Thank you so much.